Hi, I'm Bruce Brumberg. I'm editor-in-chief and co-founder of MyStockOptions.com. I want to help you avoid overpaying your taxes, and I assume everybody wants to avoid overpaying their taxes. The reason you could do this is the IRS had changed the rules on what can appear on the Form 1099-B for your cost basis. That cost basis number could be blank or could be too low, and the result is you'll wind up overpaying your taxes. Let's quickly review the rules that apply when you sell stock. You recognize a capital gain or loss. Long-term gains or losses mean you held the shares for more than 1 year. Short-term means you've held it for less than 1 year. You're going to receive from your broker a 1099-B, or often it's reformatted into the broker's own substitute statement. That has all the details about your sale proceeds, something on your cost basis, and other information you need when you report the sale on your Form 8949 and Schedule D of your tax return. Now, the cost basis is that all-important number that you subtract from the sale proceeds to determine the size of your gain or loss. And when you buy stock on the open market, it's very simple. Basis is the price you paid. Let's look at this example. You buy shares on August 15th for $20 a share. You sell it later that year, on December 12th, for $22 a share. So your cost basis is $20. You subtract that from the 22 and you have a $2 per share capital gain. Now, where it gets more complicated is where you have stock compensation. So the cost basis is the price you paid to acquire the shares plus the amount of compensation you might have recognized on the W-2. Now, when it comes to stock compensation, where is that W-2 income and what's the amount? For restricted stock and restricted stock units, it's the value at vesting and share delivery. That's the amount of income that's on your W-2. For an employee stock purchase plan that's tax qualified, it can depend on the holding period and the sales price, but there will be some amount of W-2 income. And for non-qualified stock options, it's the exercise spread. This ordinary income, it becomes part of your cost basis. Now, what's become more complicated is that when this whole new regime for reporting on the 1099-B and the cost basis came into effect back in 2011, brokers had the opportunity, the option I could say, to include this compensation element as part of your cost basis, but they no longer have that. So starting with 2015 tax return reporting, brokers have not been able to include this W-2 income as part of the cost basis that's reported to the IRS and reported to you. So what this means for tax return reporting is the cost basis is going to be incomplete in every scenario in which you recognize stock compensation income. And the result is potentially over-reporting of capital gains, which means you're going to pay more taxes than you owe. So the error that can appear, and it's not really an error by your broker, it's just a mistake you're going to make on your tax return if you don't understand that the cost basis is underreported, would be, let's say, reporting 0 as the purchase price and your cost basis for restricted stock units, because 0 or blank is going to appear for the cost basis for these kind of grants, or using only the purchase price for an employee stock purchase plan, or using only the exercise price for non-qualified stock options. Let's go ahead and look at a very straightforward example that illustrates some of these rules. Now, what we're looking at is you have a grant of restricted stock. It vests at $10 a share. You have 100 shares. And so the value at vesting is $10,000. The amount of income on your W-2 is $10,000. You didn't pay anything for it, and that's critical because that affects the tax reporting rules for cost basis. So the real cost basis is $10,000, but 0 or blank appears on the 1099-B because the broker is no longer able to show the W-2 income as part of the cost basis, and you didn't pay anything for the shares. You then sold the stock at $15,000. So when you went ahead and sold it, $15,000 minus your cost basis of $10,000 gives you a $5,000 capital gain. Multiply that by the 15% tax rate, and what do you have? $750 of taxes that you owe. However, you only use 0 for the cost basis because that's what appeared on your 1099-B. Now let's look at the actual Form 8949 in terms of the right way and the wrong way to report it. Under the both right way and the wrong way, you're putting in column D the proceeds, which are $15,000. But under the wrong way, you're using 0 for the cost basis because that's what's on the 1099-B. Under the right way, you actually put the real basis in column E, and that equals a gain of just $5,000. So that's the important lesson to learn, that when the cost basis is blank or 0, you put the actual cost basis in column E. So let's review that rule. Again, the basis is blank, you put the correct basis in column E, and you leave the other columns on Form 8949 blank. Those are the columns for the adjustment and for the reason for the adjustment. The other situation that can happen with stock compensation is the basis is too low because you're leaving out that spread from an option exercise, for example, or the discount for an ESPP purchase. So there, you actually do put the 1099-B number that's from your broker, even though it's going to be too low, in column E. You do then use the other two columns. So in column G, you make an adjustment in your gain or loss, and since the basis is too low, you're going to make this adjustment a negative number, so it's coming off of the size of the gain or the loss. And then in column F, you're going to put code B, and that's the code you use for the reason you made that adjustment in column G. 3 key takeaways from this video presentation. First, always report on Form 8949 with the results then carried on to Schedule D. Anytime you sell company stock, even if you sell it right away at vesting or option exercise or ESPP purchase. The second takeaway is do not use 0 for the cost basis for restricted stock units, performance shares. You didn't pay anything for it. Nothing is going to appear for the cost basis, but you have to use the actual cost basis on Form 8949. And then the same thing for ESPPs or non-qualified stock options. You don't want to just be using the cost basis number that your broker reports. You want to make some adjustments for it. So thanks for listening in. And hopefully by now you're a tax pro, so you want to try that tax return quiz on the Tax Center at mystockoptions.com, and also appears in the Knowledge Center that we license. And you want to spend some time looking at our Tax Center. We have a lot of very useful articles and FAQs and podcasts and other videos. We also have a special section on reporting company stock sales that has annotated versions of all the main tax forms you need to report when you're selling stock from equity compensation. Well, thanks again for listening and watching. Hopefully the guidance in this video will prevent you from overpaying your taxes.